My gut feeling is to invest it in gold.
No.
No?
It's a rock. It's a golden rock.
It's kind of a dinosaur. It is a safe place to put your money. If it's not a safe place and it takes a huge dip, I'll be buying more as soon as I can get my hands on it.
Buy your precious metals online from SD Bullion. New customers get gold and silver at spot by visiting sdbullion.com/new. Have you ever heard of Dave Ramsey?
Yeah, he used to have a radio show that was local, I think, here.
Well,
and he's somewhat opinionated, but he has a good background.
Yeah, he's a personal financial consultant. He has a radio talk show. He's a radio talk show host. He's written books. I want to hear what you have to say to some of the things that Dave Ramsey says about gold specifically, okay?
Yeah.
The caller was looking to invest $50,000 out of his 401k, required minimal distributions, the cash he didn't need right away.
My gut feeling is to invest it in gold.
No.
No?
We don't put anything in gold. No. If you don't need it and you want to let it sit somewhere, let it sit in a good mutual fund. That's fine.
That would do better than gold?
Oh, absolutely. I own some gold cufflinks, and that's the only gold I've got.
Okay, yeah. I just don't want to do anything risky at this point. That
risky is gold. Gold is much more volatile. If you look at the price of gold on a chart, it's way up and way down, much more than the stock market is. A lot riskier. And it does not yield the net return. The average annual rate of return on gold sucks.
Really?
Yeah,
okay.
It's awful.
He's a multimillionaire, no gold. Do you find that amazing?
I think it's a little boring. No, he's absolutely right. How much of a return are you expecting to get when you're 70 years old? The return he is probably expecting is to leave something for his family. No, gold is not an investment. It's just a safe place to put your money.
Right.
If you have it in another vehicle that is not as safe, like an IRA or 401k, it's, well, I have investments. You well know.
I do.
I had terrific luck with the certain oil company that I invested in. Mm-hmm. But no, I hope that, when I decide to retire, I have a lot of gold.
He says that gold is more volatile than the stock market. That's not right.
No, and it certainly isn't right today. It's not right at all. It actually moves at the whims of the New York financial markets.
Right.
Why are you so emphatic about gold? And, well, we know why. It's up and down. Why is it so up and down? Because the way it's sold is, well, if the dollar gets hurt, you need gold. I mean, that's the fear message that's behind this. Why is gold so volatile?
Gold is a commodity. Okay? It's a rock that is yellow. Mm-hmm. Okay? Yeah. And it's like, I'm afraid, so I'm going to rush towards it. And if a whole bunch of people rush towards it, it creates a shortage and the price goes up. But that's the only thing that causes the price to go up. The gold did not become more valuable, just more people were chasing fewer bars. So that's the only way price is established, where if you buy a piece of income-producing real estate, price is established based on the income it creates, not based on, oh, it's real estate, woo! It's not, oh, it's a golden rock, woo! Okay, so the golden rock has no magical qualities. It's a rock. It's a golden rock.
I agree with the fact that it's a commodity, but a rock?
Well, what he said was wrong. Now, is he advocating that you buy a piece of income-producing property? Did he just say that? If
does advocate that as an investment.
And the guy who's asking him his opinion is 70 years old.
True.
If I were 50, I might be buying real estate. In fact, I did buy some real estate when I was, about 60, income-producing real estate.
Right.
It's a good store of money. good place to store money.
It actually is money. It's real money. It's
real
been
money.
real money for thousands of years. In fact, honestly, I think Dave Ramsey should read or reread Article 1, Section 10, Clause 1 of the U.S. Constitution. He disparages gold and silver as a rock, which is just ridiculous in my mind.
Well, he's kind of a dinosaur. Because today is not a good time for people to start investing, certainly not in the stock market, because you're competing with trillions of dollars. Okay, trillions of dollars. Doesn't matter what it is. I mean, go right now is we're competing with trillions of dollars because what the hedge funds want to do is they want to pump it up and dump it. And every time they put that huge store of money behind gold, and by buying contracts, it goes up. Okay, but if they all get together and decide to short it at the same time, that'll be a good time to buy it.
So give us 30, 40 seconds on these headlines that people are seeing, and that's why we get this call in gold. They're saying, well, the dollar's in danger. China's making moves. Russia, it's in the headlines all the time. What should they do when they hear these headlines about the dollar and it's the danger in the dollar?
Well, number one, you can't run to gold. There's nothing magical about it. Okay. Number two, Brazil and China and Russia are large land masses, but Russia and Brazil are not large economies. So do you think that Brazil and any of their little friends are going to snipe the dollar? Not a chance. They're going to have to do business with the 800-pound gorilla, and we do business in dollars. So they're going to be at our mercy still.
You and I have talked about this,
Yeah,
right? Other currencies.
The majority of the world does not want anything to do with the dollar. The majority of the world.
Isn't the hubris amazing, though? Did you get the sense of
we're Americans. Our dollar will always be the demand dollar in the world.
Even Greenspan said that in 5 years, the euro is going to be the world's reserve currency.
Oh, jeez.
I mean, just because he has an opinion doesn't mean he's right.
That's true. And I think about fiat currency, which is what we have. Every fiat currency in history has gone to its intrinsic value of 0. Everyone has failed. Yep. Every single one. And so to say that is
that's why we're going to try digital. Because you can always go in the middle of the night and change the value of digital currency.
But that's a fiat digital currency. There's no difference.
It is, but you can change your debt just by making some of it disappear.
They also talk about it being a fear. Like, did you catch his little, oh, no, I'm going to run to gold. Yeah. The fear. They mock it.
He's an old school investor, but he doesn't understand that stock investment, even real estate investment, means nothing today because the competition is way too big. Yeah. I'd like to see what his investment
portfolio is.
What he's pushing.
He know what he pushes? High fee mutual funds. Heavily managed, not ETFs, not whole market, just
well, that used to be good. You remember the Magellan Fund?
Oh, of course.
What a great investment that was.
I was investing in mutual funds when I started.
And we all did, but those days are gone. Hedge funds eliminated
not
mutual
according
funds.
to Dave Ramsey. They're still going on here.
Maybe he's selling his own mutual fund.
This is from October of last year. Okay, October 2023. He's reading from a New York Times article, that he loves.
Gold is not, in any accepted sense, an investment at all. That is, it does not produce anything. It just sits there. Gold's sole financial function is as an inflation hedge. The question then becomes, how's that working out?
All right, so he says gold is not an investment, to your point.
Yep.
It's not. It just sits there. Yep, it does. And it's an inflation hedge. I would call a long-term inflation hedge.
It is, but you're before you can prove that's a good hedge against inflation, you've got to be getting rid of it. And that would be a mistake. In my opinion, you're buying it to hold on to it because it's a good place to leave some money.
Right.
And, if you want something to leave to your children, in my experience, again, the people who've been well taken care of are those that have some gold that they've inherited.
Now, he's reading from this article that gold is not an investment. And then he's going to go on and compare gold to investing, namely the stock market. So listen to this.
In August of 71, the price of gold was arbitrarily fixed at $35 an ounce. $35 an ounce. By January of 80, the last time ordinary investors went totally gaga over it, gold had reached $800 an ounce. Thus, if you bought an ounce of gold nearly 44 years ago at $800, you now own an ounce of gold that is, at this writing, worth $1,965. That's up about 2.5 times, having produced in the interim neither dividends nor interest nor anything else.
All right, so he's talking about the gold price.
Yep.
Originally, he says $35 an ounce before 1971.
It was in the 30s.
Yeah, it was in the 30s, right?
Yeah.
And then he goes to 800, right? And now this is in October of last year, so 1965 an ounce is what he's quoting here.
Yep.
It now becomes my painful duty to disclose to you that the Consumer Price Index in January of 80 stood at 78. In July of this year, it was 306, just shy of 4 times, which means that to have kept up with inflation, your $800 gold ounce would have to be valued at $3,200, but it isn't. It's at $1,900.
So again, he's saying that inflation has gone up 4x,
Yep.
but not so much gold. It's only gone up 2.5 times.
So not much of an inflation hedge. $800 invested in the S&P in January of 1980 left to compound would currently be worth $95,000, not $1,900. There's
Ouch.
the difference in mutual funds and gold. Mic drop.
Okay, old math is old math, and none of that is valid today. None of it is valid today. The people got to understand that there are lots of things that contribute to inflation. The fact that there are so many people, I don't know what he thinks about digital currencies or buying contracts and commodities.
Mm-hmm.
That's all thin air, okay? And it's
Good point.
when you cash out Bitcoin and you take your $30,000 in winnings and you go out and buy something, you somehow have turned that into money. That's not money that was issued by the Federal Reserve. It's not money that was issued by the U.S. Treasury. In fact, it's not money at all because the governments around the world don't know what to do with it because it's not money. But somehow you've turned thin air into money. That's what's wrong with our current economy because all it does is add to inflation.
I also think that this article majorly cherry-picked a time frame. Namely,
yes, yeah,
1980 to 2023. Check this out. Look at this.
And in 1980, it went back down to $250 an ounce.
I'm looking at that right here, right? So why take the peak here? He said 800. It's more. I think these are weekly closes, but 600 stuff. Why not? Oh, I don't know. 400. So why not say 400 all the way up to 1965? Right? That would have been a 4x increase. There's your inflation hedge right there. He took a spike, this spot right up here. Why not? Why did he not take the very beginning? $35 an ounce or $34 an ounce. Why?
Somewhere here, you can draw the 200-day moving average.
Right.
As a straight line.
Yep.
And it has been, up until this past year, that gold would always return to that slope. And that's been positive since 1970. Okay, that 200-day moving average.
So if you take 1970 and go to the spot price that they quoted, 1965, that's a 55x increase. And today, you know what the price of gold is today?
$25.15.
$25.15. So if you went from 1971 to today, we're talking over a 70x increase. There's your inflation hedge.
So these people are scared of the stock market. Hey, if this collapses, I'll have my gold bars, and it'll somehow keep its value in these dark times. But they've lost so much money, and it hasn't even kept up with inflation, that I'm going, I'll be way better off than you, just haven't been the tortoise over here investing in the stock market for 30, 40 years.
Yeah. We don't find millionaires that say, I got rich buying gold.
And that's not the point.
That is not the point.
That is not the point. If he wants to get people rich, his mutual fund would probably have, Apple and Google and Amazon. These are the only stocks he has in his mutual fund.
He says millionaires don't get rich buying gold. Well, I agree, but smart millionaires have gold to help them stay rich.
That's true. That's true. It is a safe place to put your money. If it's not a safe place and it takes a huge dip, I'll be buying more as soon as I can get my hands on it. I mean, that is the way you need to look at gold and silver. If it drops, that's a bonus. That will allow you to acquire more at a better price. And that's really important.
Dave's mindset is just so focused on the investment side, he can't even understand its insurance characteristics. Which is funny because Dave Ramsey touts term life insurance. And it makes me wonder, well, Dave, is that a fear play? Are you touting fear that you're going to die and something bad's going to happen?
That's so when you have nothing, you can sell your term life insurance. They're not going to use it. Why don't you just sell it?